Today is Monday, March 27th. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Here's the position disclosure. It's the same. Took a little loss trading that LCID today. I closed out my Roku position that I kept over the weekend. I made a couple dollars in Microsoft. And I just birthed a cow. I guess I gotta tell that story. My neighbor over here called me that one of his cows was about to give birth and to come on over. So, I've offered my services to help. Not that I'm any help with anything related to farming or anything, but it's kind of, I've said this in the past, it's just really cool to be able to have an understanding of the fact that your food doesn't come from the grocery store. So my neighbor over here gave me a ring, I guess at about 3 o'clock Eastern time, an hour till the market closed. Said that one of the calves was having a little trouble coming out, and by the time I got over there, so this was a twin birth. The first one I came out a day or two ago, and the second one was stuck. So I got over there, and there was 1 foot coming out of the mom. Just 1 foot. So I didn't do very much to help. I didn't really do anything to help. I kind of just stood there to try to keep the cow from moving too much and getting too crazy. He did all the work. So you had the 1 foot, whatever, same thing, hanging out, and he took a rope and tied it around that 1 foot to try to get a little leverage, I guess, and try to keep the cow in one spot. But the cow just kept moving, and he kept trying to get his hand on the foot and pull it out, and eventually he kind of put his hand all the way up there, feeling for the tail, because the cow was coming out backwards. I don't know if I said that already, which is the problem. I guess they usually come out head first, and this one was coming out backwards, and that can be a problem. So if if Farmer Bruce wasn't there to help save the day, if this was happening in the middle of the night, as an example, there's no way this cow would have survived. So at the end of the story here, the cow is only getting to live because Farmer Bruce was there to assist. And Farmer Derrick, that's me, showed up and didn't do a whole lot. So wraps the rope around the 1 foot, reaches in there trying to get the tail, eventually get a second hoof out, and the cow was just kind of moving around in like 360s, trying not to let him get too much of a good hold. But supposedly this was a good cow. Sometimes they can be much worse when you're trying to assist. But she let him get in there, and eventually he kind of grabbed the legs and just ripped the cow right out. And then I guess this has to be done kind of quickly because he's starting to drown in there. So he had to stick some straw into the calf's nose to try to get it to sneeze a little bit so that it would breathe. And then there it was. He had a brand new baby calf breathing, and Mom came over and started licking. It was really crazy. What a crazy experience. I'm just a city guy. I don't know what I'm doing out here sometimes. But now that mom cow's got twins that she's got to raise. So yeah, quite the experience. I was back in 45 minutes. Didn't take too long. I hurried over there, and I left my phone. I was upset that I couldn't snap a couple pictures. It would have been an interesting picture just to see that one hoof out. But I was rushing over there, and pretty crazy. Yeah, it really is. It really is pretty crazy. Gonna get some cows. Eventually, I might get some meat of that one in a year or two at the end of the circle of life. Yep, bullish. I love it. I love it. All right. Over to markets. How'd we close in the day? Spies closed up. Is their name T3? I love it. So, speaking of names, Peter the Fox, who I've spoken about, seems to have a girlfriend. I saw the girlfriend now for the first time. I got Peter the Silver Fox over here catching all the mice. And we've been really hoping that Peter would have some babies because there hasn't been any fox over here in a while because I guess the coyotes kill and eat them all. And then all of a sudden, yesterday, Peter's got a little girlfriend named Miranda. Peter's a silver fox. Miranda is like 1/3 orange, and the back 2/3 is kind of white. Really pretty. I wasn't able to snap a picture of that one either, but I'll try next time I see Miranda walking around. I hope they have a great relationship and have lots of babies, because I got these mice in the back and they're going to be a problem, so I could use some more fox. I guess that's how things work out here. See, that's the problem with New York City. When I'm back in New York in the subway, there's just no predators for those gigantic rats down there. So maybe we should consider introducing some predators into the subway system and see what happens. Anyway, over to markets. The S&P closed up 0.25% today. The Qs are down 0.6%, NASDAQ down 0.6% on the day, and the IWM up 1.3%. So that's the big difference here, is that we got the Russell, your mid caps, small caps, IWM, banks perform really well today, and the Qs are down 0.6%. So we got some of the mean reversion that I've been looking for. Not sure if the screen in the VTF is blurry. If it is, I don't understand why. It's actually pretty good weather, but you can just go over to the YouTube. Anyway, pulling up some charts here. Today I actually think was not an easy day from a trading perspective, even though the markets gave exactly what I've been looking for. I called for this at the beginning of last week, and I think that my call was just a little bit premature and is not necessarily off the table. Just looking for mean reversion, right? So you got the SPYs here. The SPYs are very neutral. They're still beneath this bigger, 400 to 401.50 resistance. I think that the S&P needs to get back above in order to become more short-term bullish. The big interesting thing that we've been dealing with for a couple weeks that we keep talking about is the difference between the NASDAQ and the Russell. If you just look at the NASDAQ, you think we're in a full-on bull market. We look fantastic. We tested 312.50 resistance again today. We failed at it. I'm not surprised that we failed at it, though. The more time we spend up here, the more bullish things are. And broadly, what I've been looking for actually is not really for the Qs to have a big pullback. The Qs could pull back to 302.50 and be fine and healthy. I've been more looking for the NASDAQ to take a break and for mean reversion where the IWM catches up. I know we spoke about this a lot last week. Historically, over the course of the last year and a half now, the IWM has been the leader. So whenever we've been looking at a situation where the IWM is strong or weak compared to the Qs or the SPYs, what eventually seems like it happens is, in this case with the Russell having been so weak, the rest of the market ends up pulling back, going down, and catching up to the IWM. And I've kind of postulated that because of the circumstance it's created such a massive difference between the Qs and the IWM, that potentially this time could be different. Potentially, maybe the Qs can hold up a little bit better and the IWM catches up as people start to get through this banking crisis and it's not a disaster in the end of the world. And we saw a little bit of that mean reversion on a closing percentage basis on Monday and Tuesday last week. But if you analyze the intraday price action, which we always want to do as well, it wasn't like quite as bullish as we wanted. I'm trying to remember which day it was. It was the 20th or the Monday or Tuesday last week. Let's see here. Maybe even both. You can see if you look at the candle from the 20th and the 21st on the Qs versus the IWM. I think the IWM was up more on a percentage basis on both of those days. But look how there was tails here on each of them. And the Qs on both those days basically closed on highs. So what you had happen on Monday and Tuesday last week is on a percentage basis, the IWM would be up more, and I think that was primarily, it might have been particularly on Tuesday. because of a gap, like a nice gap up, but then it would roll over at the end of the day, where even though the IWM would close up more on a percentage basis than the Qs, which does technically give you some mean reversion, it wasn't the real relative strength that I wanted to for follow through. And then, you know, you had CS kind of going on at the beginning of last week, and then you had DB potentially going on at the end of last week. And consistently as we get towards the end of the week, and I was saying this on Friday, people are just very nervous to take a lot of new long risk in these banks right now, not knowing what could happen over the weekend. So not surprised to see that the second half of the week that the market was a little bit weaker. And then the thing that I was starting to get nervous about on Thursday, Friday last week when the IWM was testing 170, and it actually was below 170 on both days but managed to close above, I was concerned that if the IWM got below 170, that the technicals would prove my thesis wrong, which has happened many times over the course of my career. That's why technicals are always number one. But I started to get concerned that if the IWM continued to sell off, if you really start to get a breakdown below this huge support level of 170, which is really big support from the base in December that the whole market broke out from, and has acted as support since we've been retesting it in March here with our mini banking crisis. I was really concerned that if we started losing IWM 170 on a closing basis, that this ADMA catches up more, that what has happened for the past year and a half of IWM weakness leading to SPY and Q weakness actually happens once again, and that I was wrong. That at a certain point, selling these mid caps and small caps causes the market to sell off further, and that's what happens in bear markets and corrections. Correlations increase. If you are long bank and you're getting smoked, you know, at first maybe Apple is a defensive position that you're in. You're kind of storing your cash here because they've got such a great balance sheet. But you have to start selling your Apple position and selling your leaders or selling your safety plays as well, because you're raising cash. And thanks, coffee. And what happened was the IWM managed to close above 170 both days, and we got through the weekend without any blow-ups. So getting through the weekend without any blow-ups led to a really big gap up this morning for the Russell in particular, and for the XLF, you know, into the ADMA on the daily chart, which is basically where we opened and closed. The XLF is up 1.7% on the day, so it's a clear leader on a percentage basis. So now I'm back to postulating into today's trading session this morning of that mean reversion thought process. We didn't get the technical breakdown below 170. There were no new blow-ups from any banks over the weekend. I think that time is on our side. The more time that can kind of go by here, the more we can kind of get through this banking situation. And then the other thought I had been thinking about over the weekend a little bit was that chart that you guys have been posting about the Fed's balance sheet and how rapidly the Fed balance sheet just increased again over the course of the last 2 weeks. But that increase in the balance sheet, I really think, should be much more short-lived compared to when they're doing outright bond buying and quantitative easing. Because this is more just like providing short-term liquidity to these banks during this period of time. And then I was thinking, well, you know, we probably just need a little bit more time for the mean reversion to take place. And that as the balance sheet begins to go back down, which I think that the balance sheet chart should correct back to where it was relatively quickly as we get through the banking crisis, and then at the same time as we get through the banking crisis, it can potentially enable this IWM to be able to break up further, and that can also bring some money out of the Qs. I think the most bullish situation you can see, and this is actually what I'm looking for, I am still bullish on this market, though I would like further technical confirmation of my thought process because I don't have that yet. So I'm holding myself back until we get more technical confirmation. But what I really want to see here is the Qs more or less go sideways. Again, pull back to 302.50, maybe not the end of the world, while this IWM has continued relative strength and bounces back, and particularly while this XLF continues to work its way higher. Because as big of this was on a percentage basis for the XLF, especially if you consider it off of Friday's low, it's still down a ton compared to where we actually broke down from, this 35-36 area. And I still think that the big banks are going to come out stronger than ever as a result of this. But they got a lot more work to do. And you need them to clear the moving averages, clear 32 resistance, and then from there you got more of a pocket where there's not so much resistance because we had gone straight down. But you have to clear through the 21 EMA, get those moving averages to create a full reversal pattern, which potentially takes a lot of time. So that all leads us into this morning's trading session, and this morning's trading session was difficult. I mean, the setup was difficult, and I think we recognized that in the morning meeting. So I hope everyone traded appropriately. There's some really good setups in the queues coming into today, and like Apple coming into today, and a bunch of those names. And what I mentioned in the morning meeting was, take your technical trade if it's there. If you want to try buying Apple above yesterday's high, fine. I remember someone mentioned Micron. If you want to try to buy this inside and up for Micron momentum, fine. And I clearly see and recognize the setups, and once again, I want to give a lot of leeway to the technicals, because the technicals are right more often than my fundamental thesis is, that's for sure. I just was really concerned, though, that if my thought process was right, that none of those trades could give any follow-through. So, we had some tech stocks kind of on the radar today, but I was kind of discussing that I was, really nervous about taking any of those longs because I felt that there could be some mean reversion that's ongoing that doesn't really let those trades play out. But at the same time, you had the IWM and the XLF gapping to the 80 EMA on the daily chart, and that's like kind of impossible to buy. The basics of technical analysis that we talk about all the time, don't buy a downtrending stock, a downtrending market on a gap up into the equilibrium area. If you're buying a stock or a market that's breaking down, it should be because you've got a clear reversal pattern that's already been confirmed, in which case it's not going down anymore, it's actually going up. Or you're buying like a massive degree of downside extension, which we were hitting that point actually for some of the banks on Friday. It was not an easy buy to buy them in the hole, but it was on the list for Friday morning. I remember I didn't get it. I really wanted to load up in Bank of America between 25.50 and 26 on kind of those depths if I could have gotten it. And I did do some buying of Bank of America on Friday, but I never got I was planning on getting really heavy into like 26 bucks, and I never was able to do that. The low's 26.35. Or JP Morgan actually gave a little bit of a better opportunity. I think my best buy in JP Morgan was like 124 on Friday. I might have gotten some at 123 if it printed down there pre-market. I don't think so though. So wanted like a little bit of a deeper pullback on some of those banks you ought to get stock. So if you have it from Friday, awesome, great, congratulations. They closed on highs. That's when you do swing some. Even though it's obviously pretty risky to hold banks over the weekend right now, I think if you're doing it in these, majors, that it's a lot safer. But then you get the gap up into the 80 EMA today. Do you buy a weak market, a downtrending market on a common gap higher into the 80 EMA? That's an extremely difficult buy. It's generally not something you want to do. It's generally not going to be something that's going to give you consistent profitability. But at the same time, even though these tech stocks are looking so bullish, I just felt that they weren't going to give any follow-through today. So it kind of created a trading session that I think was very difficult from an actual trading perspective this morning, even if we got what we were looking for, big picture. So yeah, kind of a day that you had to be a little bit more defensive. And I actually had some of my best trades in those weaker tech stocks. And that was also just because, you've obviously got to look at the 5-minute of the queues really quick. When we're selling off here into noon, the sell-off that started at highs and ended basically at noon, and we found some support around 308. You look for the counter trade setup, the counter trend setups, and you've got the right extension on multiple time frames. This is a lot of downside extension for 12 o'clock. I remember calling the long off of the 12 o'clock low midday trading. I usually don't like midday trading, but this is some solid downside extension for a 5-minute chart for midday. And then you had this like 5-minute RDR pattern, which has actually been something I've been looking at and implementing more into my trading off of extension. Basically, if you try to buy back through the 11:55 low versus the 12 o'clock low, and you kind of get the hammer candle. Obviously a little tricky because the next bar shakes out. It didn't happen with all the stocks that I was looking at where the next bar shook out. but I was able to come in and kind of buy some stock in that area and some of the tech names looking for a balance. And part of the thought process was, though, that I don't think, can the Qs be weaker than the IWM? Absolutely, they were. Qs are down, IWM is up. I don't think that you're going to get a real massive breakdown in the Qs, even to that 302.50, or have a big downtrend day, if the IWM is actually acting really strong at the same time. So remember, you know, even though if you're trading Apple or Amazon or Google, you should be looking at the Qs and not so much the IWM. But I remember looking at the IWM at noon when the Qs are massively breaking down, and you got this 11:55 candle that doesn't even break lows. You got this 12 o'clock candle here that looks like it's trying to give a mini intraday breakout. Not that I usually give too much of a I don't know what the right term I'm looking for is. Not that I usually care too much about intraday breakouts, period, let alone when they're happening at noon. But I was mentioning earlier that if we could get above the 10:25 a.m. high, that it would be very bullish for markets, which we did eventually do at 12:15. But I remember at 11:55 and 12 o'clock looking at the IWM, and I was like, yeah, you know, obviously there's money coming out of the Qs here. XLF is holding in, IWM is holding in. That all makes sense to me. But are we really going to be able to have like a down, you know, 2% day or 2.5% day for the Qs? Am I really going to see Qs at 305 or 302.50 today when this IWM can't downtick at all? So that just kind of goes back to, this is why we always want to start with the big picture and work our way down to the small picture. If the IWM can stay really strong and we're getting mean reversion, I think that it's more about the Qs more or less going sideways or maybe having lighter pullbacks than more of a major pullback. I don't think you can have a major pullback in the Qs with the IWM really breaking out and breaking higher. So if I'm looking at the Russell, and the Russell on the 5-minute chart give me the okay sign, even though I'm expecting the Qs to be weak, I don't think that at noon here I'm going to be able to get big follow through to the downside on these Qs. So that's kind of where, you know, you start with just your usual kind of counter trend extension setup, you know, 5-minute RDR, or the hammer trade that's coming in or whatever, and you're looking for that balance. This did end up kind of being the low of the day. You know, I was more looking at Apple at that time, though Apple actually broke its lows. It gave that nice bounce, then gave another opportunity to get stock at 158, which was a different trade that I was in. I think Brant jumped in this one with me. Brant, I hope you made a couple bucks in this one if you're still listening. Google was kind of similar at noon. This one actually made a new low as well, but I scooped some up at 102. But it, you know, kind of just the same thought process. Amazon was one that I bought around that time as well, around noon. This one actually never broke its lows, so held in a little bit better. Actually showed a little bit more relative strength compared to some of those Qs. So, interestingly enough, even though I was very gun shy, especially on tech stocks today, I actually had some of my best P&L by buying some of those tech stocks around noon, which is also interesting because that's usually when I'm not trying to do a whole lot of new trading. And whereas the financials, I don't think, if I wasn't already in Bank of America and JP Morgan today, I don't think I would have been able to make money on them, trading them intraday. The gap was just too big and too difficult of a spot on the daily chart. So that kind of more or less sums up my day. I took a loss in Lucid today, which I bought a feeler on pre-market and I added on when the market closed. When the market opened. 8:30 was an important spot. This is the danger, by the way, guys, of buying stock pre-market. If I never bought the feeler in Lucid pre-market, I feel very confident I never would have bought it after the market either, and I never would have taken a loss. It's a small loss. It's not the end of the world because I was never, you know, whatever, in a bad spot. You know, the dangers of buying pre-market, sometimes you get a little bit of a jump start on things. Sometimes you take a loss in something that you wouldn't have taken otherwise. $8.30 was the spot to buy for a breakout. It got an overweight initiation and was relatively strong pre-market, as was Rivian. So I had Rivian 14 on the list, which never broke, so there was no trade. We had FSR for $6 on the list. I don't think that broke until the afternoon, so I stayed away from it. But this Lucid I bought above 8:30 pre-market is kind of a feeler. It opened below 830, which wasn't good because I never would have bought the stock if it wasn't trading through 830 or gotten above 830. So it opened below it. I tried to manage the position a little bit. I ended up, averaging down off of lows and taking more of a real position at $8.17. A little bit later in the day. So, again, I wanted to add on the way up through 830. So I bought some pre-market above 830. It opens kind of at or below it. So I'm watching these candles here to see if it can break back through 830, and I'll take that long. And it just wasn't trading right. And I was like, ugh, I hate this company. I can't believe I'm in this. I'm acute, and I'm not bullish on tech even to begin with today. But, confirmations through 830. It never happened. Got this bigger pullback. I kind of added some a little bit at 817 to try to manage the position. And then I ended up using this 811 as a low. I was able to sell a little bit into this bounce, but then I got stopped out. I got stopped out actually almost at the low of the day. Because my stop was at 811. I got stopped out. That's where my stop was. So I think I got 810 or 811 as the stop loss. And then it bounced a little bit. Whatever. Doesn't matter. Took a little hit in it, very small. And I guess the moral of the story is that's the danger. Everyone I think always likes to pay attention to when it works out great. That I bought some stock pre-market, which sometimes it does, or in another case like this, it just cost me some money. So that, I think, is all I've got for you guys today. It was an interesting day, not an easy day, but it did play out the way that we are looking for this market to kind of play out right now. So, happy to take a look at any questions or anything that you guys are looking at. Scroll up here into the VTF. Some news on pins came out. Is pins moving on that? Up a little bit. Never heard of a cow market. From J. Cole, those banks are paying the Fed funds rate, right? I'd imagine they'd want to pay that back ASAP. I actually don't know the answer to that. I don't know. I don't know what they're paying off that or how that's working. They're able to use their treasuries as like at par collateral, I'm pretty sure, just to be able to get cash. But I don't know what they're getting charged on it, or even if they're getting charged. From Kyle, when trading names without a catalyst, not in play, is it much more important that the market be supporting this trade? Yes, it is. For example, today with ZS, ZS, besides being spready, is this a situation where you want more market support since it's not in play? Yes, absolutely. And this was one of my biggest concerns with ZS and every other tech play that we had on the list today, is that I just didn't think the market was going to be supportive. I like the ZS pattern here. I would rather be long than short the stock. 3 insight days in a row. They got really tight. So, long verse 113.06, I think was the call out. Opened up pretty spready. Maybe some of you guys were able to get some stock off this opening low of 112.95. Gave a big momentum move, and that was purely technical. Created this wedge. The wedge broke down. The trade was shot. So yeah, for sure. I think that the market itself. I really don't like to rank the layers of probability. Like I got that class where I do the layers of probability. I really don't like to rank them because they're all important, and I think that they're what's more important, what's less important is very much dependent upon the situation and the time. But with that said, I would say that generally, I consider the market to be the most important layer of probability. Generally. But not always, because if you've got a stock that's in play, has a catalyst, then that layer of probability being in the market goes down, sometimes goes down significantly. The market still matters, but it matters much less. And when you don't have a news catalyst, then the market matters significantly more. So, yeah, so that would be the answer to your question. Next is from Tate. If you take off risk into the close for your game plan, is there a critical factor that makes you take off more or less from some positions? rather than all of them besides P&L? And is there a preferred time you start transacting into the close? You take off X amount at 3:30 often, or does whatever market condition dictate the time you take some off? So for example, let's say Monday. Sure, I understand the question. So this question probably is directed a little bit more at my own personal trading with what I do as far as, you know, swing trading with day trading around core positions for cash flow. The way that I do it is it depends a little bit on the stock that I'm trading, what the game plan is of the stock that I'm trading. I'll start by saying that. But sometimes I'm buying and selling stock in increments. This is the easiest way to kind of get the point across. Sometimes I'm buying and selling stocks at increments, right? So I'm selling some stock in whatever stock, you know, every 10 cents, every 25 cents, every 50 cents, every dollar. I do all those things. So if I'm supposed to sell stock every 25 cents, and my next offer is, I don't know, let's just say Bank of America. I'm trying to sell stock every 25 cents up. Let's just say. Let's just say that I'm doing it, you know, very evenly, $28, $28.25, $28.50, $28.75 on the way up. Now, let's say the end of the day is going to occur, and I'm offered at $28.75, and the stock is, let's pretend it's a little bit higher than where it closed. Let's say that the stock is trading at $28.70, and I'm offered at $28.75. Do I really want to take overnight risk to make that extra 5 cents? No, I don't. So it's a no-brainer that I'm gonna, you know, look to sell whatever I was planning at $28.75 at $28.70, and then I'll probably look to rebuy that stock at $28.50 tomorrow if it gives me the opportunity. Is what I would do there. And that does a couple things for me. It takes risk off the table. I've got less overnight risk. I lock in more P&L. I pay less in overnight interest, because I pay overnight interest on my positions every single night. So whatever I'm able to take off in the close, it saves me a couple bucks there as well. And you know, potentially, and then you know, a couple things could happen the next day. You know, maybe I'm able to get my stock back at, you know, $28.50 tomorrow, and I keep the difference, and I wouldn't have been able to keep it otherwise. Or maybe the stock opens up at, you know, $28.80, and you know, I didn't make the extra 5 cents. But either way, it's generally going to be better off that I took that risk off the table. When do I do it? I used to do it in the last 10 minutes of the day, very specifically, and that's really still my goal, between 3:50 and 4 o'clock. 3:30, 3:15, like you're saying, that's way too early. There's still plenty of time for the stock to move around, fill my offer if it wants to, pull back really deep. Heck, maybe you know, I was thinking I might be selling $28.75. Next thing I know, I'm buying $28.25, because that's what happened between 3:15 and 3:50. But generally in the last 10 minutes, I'm not doing any add backs, and I just wait for the last 10 to 15 minutes. I'm not doing any add backs, and I'm trying to take off a little extra stock, take a little extra risk off the table. And again, in theory, I would want to do it as close to the close as possible. I got to give myself a little bit of time for the executions, and especially because I prefer to limit out. Meaning, if I was offered, you know, if it's 10 of 4, and I'm offered at $28.75, and the stock is trading at, you know, inside offer $28.69, inside bid $28.68, I'm going inside offer. So I'm trying, and I was talking about that the other week too. I'm trying to not pay the spread as much as I can help it. I'm trying to get the rebate. Sometimes that means the stock moves away from me. I was trying to sell some SoFi into the close, doing exactly that today. I put my offer out probably at like 349 or 350. Went inside offer at $5.81. I eventually didn't sell until 577. In that case, I would have been better off just hitting the bid at 580, paying the spread and paying the ECN fee, because instead you know, I got a 3 cent worse price, but I provided liquidity instead of taking liquidity. It definitely is more money in my pocket if I just hit the bid at 380. But you don't know that. So, you know, for every time that happens, there's plenty of other times where I'm able to just kind of get filled on the offer. So that's what I prefer to do when I can, but I need to give myself a little bit of time. So basically, you know, I want to try to do it as close to the close as I can, but I got to give myself the time to get filled. I got to give myself the time to go through 10 to 25 stocks, so however many I happen to be in. So, hope that helps. From Rex, ooh, long one from Rex. I took a couple trades this morning, but ended up all of them failed. I took SoFi in the break of 583 at the open. Oh, that one might have been my idea. So the SoFi had the same pattern as ZS. I liked this SoFi a lot because the banks were strong this morning. We did note that SoFi was relatively weak compared to some of the other banks. So I'm actually really disappointed with the SoFi performance today. You've got SoFi up 0.7%, you've got XLF up 1.6%, you've got KRE up 1%. So SoFi is an underperformer no matter what you want to compare it to. I guess this also does trade a little bit like a techie growth stock sometimes as well. But yeah, you got a good-looking daily shooter here. You know, a little bit of a tougher pattern. It could break in another direction, but I prefer the long side. We had mentioned that the space between 580 and 590 has acted as resistance, so it still held that resistance zone today. But I did feel that if it was able to really start clearing the inside day high from Friday, that could be a catalyst that gets above 590. If it gets above 590, we could be looking at a move into the lower sixes. So yeah, that one unfortunately just failed. Apple at the inside 5 at 10.05. Yep, broke up. Again, that just goes back to what we were saying about the Qs, though. That's why I was trying not to be aggressive with these stocks. Though they did, for a moment there, show like they might want to run again. I didn't really believe in it. But yeah, above 160, inside 5, acting strong at that time. Yep, I agree with you. The big picture, though. I know that short-term technical was almost at the red this morning. Yeah, not quite. I think I still have Pat's note up here. There's a bunch of things from Pat's note that I wanted to bring up. This thing being almost in the red doesn't mean it's in the red. So to me, this is not a layer of probability actually to not buy, to be totally honest with you. There's some other interesting stuff in here. This position indicator from Goldman being back in the extremely light zone at the same time as we're seeing somewhere in here it mentioned that there's been a lot of flow back into money market funds is interesting. I think that this is all actually pretty bullish. Some of this data that's coming in is an extra layer of probability that this market could rock and roll, but I'm not going to get into that too much right now. Okay, so you didn't take both with a lot of risk though in SoFi and Apple. You pared down the risk because you knew that the mean reversion could come in. So that's a great job. I also traded BAC long at 10.10. Yeah, I like this trade. It just couldn't get any legs. 5-minute ADMA caught up. Yeah, that time of the day is when then we decided. The biggest problem sometimes with some of these gaps, I know I've said this in the past, is that as soon as your 5-minute chart's giving you the go-ahead, it's late enough in the day that you need your 15-minute chart to cooperate very often, unless the stock's going to be extremely strong. And that's what happened with IWM today. So IWM, it's just like, all right, our 5 minutes looking good, but all right, it's 10:15, 10:30. We need the 15 to catch up, and it was really the same thing with this XLF weakness. And BAC was actually relatively strong here, but it just wasn't enough. Yeah, so I mean that's basically it. I like your trade here. It was just that the market wanted the 15-minute to catch up. Also took Tesla at 10.15. 10.15. I don't like that trade as much as this one. I remember calling out the long at 9.55. Even that wasn't great, but that's the first test at ADMA. The fact that you're retesting the level and retesting the ADMA on the 5-minute at this time of the day is actually probably a signal that you need the 15-minute. which I realized I didn't like it after I got stopped out because I think Tesla should have gone after the 950. Yes, exactly. Yes, yes. I love when you're able to answer your own questions. That really shows you're learning. In the morning meeting, as you said, the index needs to catch up to the other when short-term tactical was almost red. Yeah, Pat mentioned the short-term tactical being almost there. I really don't. Anywhere in the white zone is fine for me. When it's red or green, I start getting nervous. You know, being red means don't buy. Being green kind of means don't short for me. But if it's still in the white zone, if it's not there, I guess with it being where it was, plus the gap up, you're getting pretty close. But I wasn't super nervous about short-term tactical, not technical. And the relatively strong stocks, especially tech stocks that are pushing right at the open. Would it be easier to fail as they were more extended and caught up to the red zone on the short-term tactical? Josh was shorting cues in NVIDIA. I thought Josh's trade was difficult also, to be honest. I think he made a couple bucks in it, but it was, I just thought it was early. It wasn't giving me the extension signals I wanted. How would I trade this if I was flat? I wouldn't. That's the point. Or if I did, it would have been like what you said with your first couple trades where I'm doing stuff very small. I really want more confirmation. Not that it's like a day 2 up or whatever, and short-term tactical is maybe gapping into the red zone. It was like I said in the morning meeting. The market was in a spot where because of the gap, it's very difficult to buy. You're not getting your discount on those banks like we did on Friday. But I also thought that the short sell was very difficult because the Q daily chart, as much as I'm looking for mean reversion, looks extremely bullish. And yeah, the IWM is supposed to pivot where it gapped up to, but my thesis says the opposite. So the information I'm looking at this morning was to tell me, you know, be careful buying, be careful shorting. So if I came in flat today, I don't think I would have done a whole lot. I just would have been very patient. Which, even coming in not flat, that's kind of what I did. My last question is, if taking an extension long like Apple today at 12 o'clock when the ADMA caught up, but still hasn't reached your 1-to-1, would you sell? No. No, I really need at least a 1-to-1. From Mike Reed, I passed my SIE last month. Congratulations. And now I'm studying for the Series 57. It's probably where you should be instead of in our afternoon meeting. I'd like to start the transition to Lightspeed from my current platform and was curious if I should run a trial through T3. Thanks for the guidance. The general rule is that we provide a demo after you pass the Series 57. I would email your Class B member for more information on that, but while you're studying for the exam, you know, if you want to hop into the afternoon meeting for, you know, keeping up with the market and stuff like that, for sure, go for it. But generally the thought process is focus entirely on the 57. The 57, by the way, is much more difficult than the SIE. The markets aren't going anywhere. The beautiful thing about the stock market's an opportunity creating mechanism. There will be more opportunities. You do not need to trade the ones today. Honestly, something that really bothers me that happens sometimes is we're trying to onboard a trader into T3 Trading Group who is so focused on the markets that he fails the tests. And that's just a lose-lose for everybody. So I would say, you know, don't worry about Lightspeed, don't worry about the platform, don't worry about any of that right now, just worry about the tests. From Rich, if an inside and up on the daily fails, failed move, fast move, and we still short back through, where's the proper out? I don't, so for sure there is a term in trading, and I talk about it all the time, from a failed move comes a fast move. I'm very cautious on trading failed moves. I'll do it a little bit if it's like a failed breakout or failed breakdown. I like those better. I'm a little cautious on failed patterns, just because I don't want to overcomplicate my trading. I'd rather the pattern failing being a signal more for me just to get out of the way, because Sure, from a failed move comes a fast move, but sometimes a failed move becomes no move, and then they just kind of ruthlessly punish the shorts and longs and can just be churning around and stuff. So I don't really have a trade that's on the failed inside pattern, inside bar pattern, or like failed technical patterns. I don't really take those. The only one that I kind of ever really take as far as failed move goes is failed breakouts and breakdowns. So, appreciate the question, Rich. From Sebastian on YouTube, what do you think of going long Apple at the Open when it broke the pre-market high, had inside day, and had been showing relative strength? Also looked like a trendline breakout. Yeah, I mean, that's what I was saying in the morning meeting about the Qs, about Apple in particular. You cannot deny how bullish these charts look. I just have a fundamental thought process right now that had me being a little bit more patient on them. From a technical perspective, Sebastian, it looks like a great trade. If you understand what's going on with the market right now, maybe it would give you a little bit more pause. And that's why I like to incorporate both. Alright, just about 5 o'clock. Looks like I got through everything. Quite an eventful day for me. There's a few more cows over there that are about to give birth, actually, so I can go over there and watch a regular cow birth if I want to. Have a great night, everybody. See you all tomorrow.